sharp sell-off across global equity markets this morning, with European bourses on course for the fourth straight day of losses, with the UK's FTSE 100 index currently down around about 50 points, dropping below the 62.20 level today, but just finding a bit of support right above that, while the Euro Stoxx 50 index is lower by around about 32 points. US stock futures are also indicating a lower open on Wall Street. The Dow Jones Industrial Average front month futures contract is off around about 55 points, while the S&P 500 front month futures contract is off around about 5.5 points. The DAX in Germany is currently lower by 130 points. In the currency space, all major FX pairs are trading lower, particularly the dollar, which is extending its losses from yesterday. The yen has rallied sharply on the back of that, and in the peripheral bond market space, Italian and Spanish bond yields are spiking higher, although Italy has just had a pretty decent debt auction, but that's done nothing to help the peripheral bonds. Good morning, I'm Ishaq Siddiqi, and welcome to a daily market bite. I'm going to give you a quick idea of what's going on in financial markets today. So let's go over what happened yesterday. Speculation about the Greek government calling an emergency cabinet meeting together with a vote of confidence for the current PM, Antonio Samaras, had the markets pretty shaky, and that was after Greece failed to sell up a big ticket asset on Monday, and they were also downgraded by MSCI to emerging market from a developed market. So those two things really compounded worries about Greece and the situation out there, and the possibility that the country will fall back in meeting its targets with its international creditors. If it fails to do that, then we are going to see a flare-up of the Greek situation, which could lead to a sovereign default and possible elections. And given the rise to left-wing parties which are very anti-Euro, such as Syriza, who dominated the headlines in 2012, as they were very close to taking away Greece from the hands of democratic parties, but we did see a democratic win in 2012, but investors are feeling quite worried that may soon be over if the Greek government cannot continue to meet their targets with the Troika. So that sparked the sell-off in Europe, and we saw a continuation of that sell-off in the US market. In the US market, the real fears were not only what's going on in Europe, but also at the same time the continued worries about Federal Reserve tapering quantitative easing. That was further compounded by the fact that the Bank of Japan have held back from adding stimulus, and at the same time the European Central Bank's OMT program came into question over its legality, and worries that we may see a German Constitutional Court posting parameters and restrictions on the way that the OMT functions, has left markets feeling extremely worried about the outlook for global stimulus measures, and if we're going to continue seeing stimulus measures. And at the moment right now, the fear that we're in for a prolonged bout of reduced liquidity in the market has sent investors rushing out of risky assets, dumping them in favor of safe haven investments such as German bunds and UK gilts, which are offering better yields than some of the equities out there. Although most people are still quite bullish on equities and see that this turmoil in the market that we're seeing right now may just be a temporary blip until we start seeing a wider US recovery kick into place, which should help financial markets. But for the moment, it's still pretty it's grim. And touching on what's going on in terms of European share markets, we are trading modestly lower across the board, and worries about the Fed's next move. The markets are second guessing it at the moment. We've got the policy meeting by the Federal Reserve on Wednesday, so a lot of sharp focus is now drifting towards what the Fed may say then. In Europe at the moment, there's been no economic data to influence price action. The real market mover today will be US economic data. We have retail sales coming out, weekly jobless claims, wholesale inventories, and we also do have import prices coming out of the US later this afternoon. So a lot of focus will be on that, maybe to gauge how investors will be using it as a gauge to figure out where the Fed stands in quantitative easing and if we might see tapering anytime soon. Another big story is the fact that we, with the reduced liquidity on board in the marketplace, we are seeing a big move out of emerging markets into developed markets, and investors are at the moment feeling a lot less risky. So risk aversion is dominating the mood, and it probably will continue to do so until the Fed's policy meeting next Wednesday. Thanks for watching your Daily Market Bite. Tune in for another one tomorrow.